Welcome to the CDFA Hotline. My name is Kristen Sharon, and I'm really glad that you're here with us today. The purpose of this show is to provide general education about money and divorce and to highlight how divorce financial professionals like certified divorce financial analysts and certified divorce lending professional practitioners can help you through this process. We want you to feel more informed, more prepared, and more confident when you sit down with your own team. Before we dive in, it's a very important reminder, nothing you hear on the show is legal advice, tax advice, or personalized financial advice. Every divorce is different, and mortgage options and outcomes can depend on many factors, including your credit, income, assets, your state laws, and specific lender guidelines. This show is educational, it's not advisory, so please do not use anything that we discuss today as a reason to skip getting advice that is tailored to your individual situation and your local rules. My guest today is Carla Kite. She's a mortgage professional with over 28 years of home loan experience. In 2017, Carla earned her Certified Divorce Lending Professional designation after spotting a critical gap between divorce settlement agreements and what lenders can actually approve. Since then, she's focused her work on helping divorcing homeowners and professionals who support them structure real-world strategies that line up with both the legal agreement and the mortgage guidelines. You can find her at mydivorcemortgageplanning.com. Over just the past 3 years, Carla has consulted with more than 400 divorcing couples nationwide, working on scenarios like buyouts, refinances, removing a spouse from a mortgage liability, using income to qualify for a loan, debt allocation, and how to time things so that people don't actually sabotage their ability to keep or buy a home. She's the founding member of the Kite team at Cross Country Mortgage, a mother and daughter partnership that she leads with her daughter, Kelsey. So, Carla, thank you so much for being with us today.
Thank you so much for having me. I really appreciate it.
Well, let's dive right in. So, you've been in the mortgage world for nearly decades, and then you chose to specialize in divorce lending. For listeners who are just starting this process, can you explain why divorce and mortgages are so tricky together?
Yeah, so I mean, first of all, I think that it didn't used to be as tricky as it is today. I think the complexities today that add to that are the higher interest rates and the higher home values. And so that's making divorcing and remaining in home ownership today a little bit different than it was even back when I first got my certification. And it's tricky. And by the way, I have to mention a CDFA is who turned me on to the certification that I have as a lender. So,
Oh, that's great. Well, what goes wrong when people assume that the divorce decree and the lender are automatically on the same page?
I'm sorry, what goes wrong? You broke up there a little bit.
Yeah, what goes wrong when people assume that the divorce decree and the lender are automatically on the same page?
Yeah. I mean, I cannot even start to explain the break in that process. I think a lot of people think that whatever their attorney says goes. And that has to be followed then by the lender, which is completely untrue. And most attorneys don't really understand or know anything about the mortgage guidelines. And so there's a huge break right there when that assumption is made that whatever is written on their divorce decree can actually be executed as a lender. And income is probably the biggest issue that we have there. It's figured differently by attorneys than it is by lenders.
Let's say a listener wants to stay in the home and buy out their spouse. What does a buyout refinance usually look like, and what are some common misunderstandings about how that works in divorce?
Yeah. So for starters, most lenders don't even know what a true buyout refinance is. There really is a difference between a buyout refinance and a cash out refinance. Um, some of the biggest the language has to be written properly in the settlement agreement for us to actually execute a buyout refinance as opposed to a cash out refinance. A buyout refinance can go all the way up to 95% of the value of the home. The interest rates are a little bit lower and the fees are a little bit lower. So if you're looking at trying to do that, if you're maintaining the home and you need to do a buyout, you have to be really specific about the language that's in there. So you probably have to be working with, a consulting CDLP prior to finalizing your agreement, because we want to make sure that that language will align with a buyout agreement. In a buyout, the person maintaining the home cannot receive one single penny from that refinance transaction. So if they want to include anything else in there, like attorney's fees or maybe some debt that they have, racked up during the divorce process, the only way they can do that is if they allocate it properly to the ex during settlement. So that way we can wrap everything up into that. If they end up going down the cash out route, they're going to be limited to 80% of the value of the home, and they're going to pay higher interest rates and fees.
That's really important to know so that you can avoid those pitfalls.
Yeah,
And a lot of people probably don't even know that they have that option.
nope, nope. And their lender doesn't either, which is a big mess.
How important is it to get a realistic house value early in the process?
So this one's tricky. So I think it's important, and it's important how you get that value too, right? I have a lot of people valuing their properties based on an online like valuation like Zillow or Redfin. Sometimes they use their tax certificate. Um, the problem is that that value generally changes over the course of the divorce because divorces can take so long. And as you know,
Mhm.
values are very seasonally driven, right? So, if you pull a value in the dead of winter compared to the middle of spring, you're going to come up with different values. So I think it's just important to be conscious of that. And also maybe that person that is valuating the property should be an appraiser. You might want to, in the settlement process, you might want to agree to revalue the property at the time of finalizing your divorce because it will change.
A lot of people think the divorce papers say the house is mine, so my ex is off the hook on the mortgage. From your perspective as a lender, what's the difference between being taken off the title and being released from the responsibility of the mortgage?
Yeah. So, and this kind of goes back to a previous question. Just because it's a court order does not mean that it's going to actually be executed by the lender, right? And by the lender, I'm talking about by the servicer, so who it is that you're paying your mortgage to. So there are a lot of servicers that will allow for a release of liability. And so they will remove you from the mortgage or the spouse that's vacating the property, but it's a process. And so first you have to find out if it's a possibility, and second you have to find out if you qualify to do that. But that document that says that you're now awarded the home and that your spouse is released of liability, that does not mean that they are truly taken off of it in terms of credit. So if you ever make a late payment or anything like that, it will damage their credit severely. Um, I think what's more important about that part and something that we're seeing more often now is if you are still going to remain on, most people will not get off of the title if they can't be removed from the mortgage. So if they're still on the mortgage, they're probably going to remain on the deed until they are removed from the mortgage. The problem that we're seeing today is people are in financial trouble. And so there's a problem with possible tax liens, people filing bankruptcies that no longer really own the home. So it's really, really important that you make that final separation and that they are actually removed. And you might have to do a refinance to do that if the servicer will not allow for a release of liability or if you don't qualify.
If a settlement says that one spouse will refinance and remove the other from the mortgage, what needs to happen for that to actually be possible? And what happens if they can't qualify to refinance?
Yep, so that is another big problem we're having today. I keep finding there are value problems in many parts of the nation right now compared to, I mean, we have higher values now, but compared to like if you bought in 2022, values were very high. Values have come down from there. So what we're finding today is people are making agreements in divorce to either refinance or do a release of liability, but then there's never a what if that's addressed. For whatever reason, like the attorneys are not addressing, or whoever is helping you with the divorce, or even if people are doing it pro se without any representation, they're not addressing the what ifs. They're just making an assumption that this can happen. They assume that you can release or be released. They assume that you can refinance, but then they never say what if. And in some cases, they do, and that what if is hard and fast. It's that you have to sell the property. But what we're finding is a lot of people just will assume that they can do that, and then they don't address what if, and so then they end up back in court down the road, more money, more time, trying to get a modification.
Um, can you suggest some ways to structure a settlement to give a realistic timeline and projections if the refinance doesn't happen? How long should a refinance typically take before you find out whether or not you're going to qualify?
Yeah. So the reality is a refinance should be able to occur in, you know, 2 to 6 weeks max, right? And when I say that, I mean that's how quickly the lender can get it done. The problem is that if you're trying to use any of your support to qualify for that, then it's that time period is going to be extended because you have to receive it for a certain period of time before you can actually count it in your income. And a lot of people miss that. So like I was talking to a lady the other day who her ex wanted her to sign a document saying that she would refinance within 60 days of signing the document. And that was in no way, shape, or form going to happen because she needed the support from him, and the support hadn't even started yet. So yeah, it's very individual. We have to really understand that person's qualification and how they're qualifying before we can give them that time frame that they need to write into the settlement agreement.
What questions should someone ask before agreeing to I'll refinance in 6 months?
So first of all, one of my biggest issues is attorneys will tell people go to your lender and figure this out, right? Go to your lender and figure out if you can qualify for this. Make sure that you're working with a lender that really understands the nuances between divorce and mortgage, right? Because I see this time and time again where to a client, that means they either call the lender that they use to purchase the home or they call the servicer that they're writing the check to today. And it's very likely that neither one of those are a CDLP, neither one of those really understand. Now, they can dig into the guidelines if they really care to make sure that you're being taken care of, but they're not going to really understand that whole nuance. So I would say just make sure that you're working with um, a lender that understands this so that they can look at your full situation and make sure that they make a recommendation that is actually going to work. I have a guy right now that um, he's been a stay-at-home dad, and he just went back to work in September. So we had to take his file all the way through the underwriting process to make sure that we could actually qualify him when his support kicks in, which won't be until next August that we can start using it. So it was really like we had to take the extra step to make sure because he hasn't had a job for 17 years prior to his current job. So it's really, really digging in and understanding.
And is a mortgage lender that's not a CDLP going to go those additional steps for a client like that that
I
needs that
don't,
specialized situation?
yeah, I don't think that they would necessarily know to do that. And they
Mhm.
also probably would not counsel that client on what we are going to need for proof on that support. The court order alone does not allow us to use the support that we need to help people qualify. So, we have to show actual proof that they have received that support on time every month. It has to come from the right account and enter the right account for us to use it. So there could be a big miss there if the client is not counseled properly moving forward.
What are some common ways that divorce decrees actually make it harder for the support income to qualify, even when the intention was to help the lower earning spouse?
Yeah, so the two big problems that we see there are graduated payments. So if you have payments that start at 5,000 and end at 1,000, 2 or 3, or even 10 years down the road, that's very problematic because we always have to use the lower amount. The other huge one is lump sum payments because once you opt for a lump sum payment as opposed to monthly, maintenance or alimony payments, that now becomes an asset that is no longer an income for the client. So those are the two big issues, and there's a reason why they do those, and I understand that. But if the need is really to show that monthly income, we have to step in and make sure that that language is put in the settlement properly so that we can use it as qualifying income.
That's important to know.
Mhm.
Divorce often involves shifting debts, credit cards, car loans, maybe even joint personal loans. From the mortgage side, why does it matter how those debts are divided and whether or not they're actually paid off or refinanced?
Yeah. So this is one of the things like early on in the process, if we are brought in early enough, we can help. We are not making any legal suggestions. Like we're not deciding anything legally. But once the legal portion has been decided and we know who gets what legally, we can move that around, kind of like a game of Tetris, so that it works properly for each of them. I'm often working with both of them, so that they can both qualify for a mortgage. So we might move one asset over here and then allocate another debt over here, so that they both can move forward and remain in home ownership.
For someone hoping to buy a new home after divorce, what are 2 to 3 smart moves that they can make with their debts to help improve their chances of getting approved?
Yeah, I think a lot of people they'll tell me like, oh, I want to get everything paid off before I talk to you. Don't do that, because you might be paying off the wrong thing. So I think more importantly than anything is make sure that you get with a CDLP early on. We want to see how are you qualifying today without the divorce affecting you, and then how is the divorce going to affect that qualification, right? Because then we kind of know what we need to move around, what you maybe do need to pay off, what you don't need to pay off. Let us help you navigate that piece. Trust me, I mean, uh, any lender really wants you to stay in home ownership, but that is truly, truly our goal is how do we keep you in home ownership and keep you on that path, right? To earn more wealth as a homeowner.
It's you talk a lot about timing strategies with
Mhm.
clients. How important is that? The order in which things happen, like filing, finalizing, refinancing, moving. How do all of those things impact whether or not someone gets approved for a loan?
Yeah, it's huge, and it is a huge miss in the whole divorce space that so many people wait until they have finalized to reach out to a lender, or they wait until they're very close to the end to reach out to a lender. Um, that is one of the biggest misses, and especially, one of the other things that I really pride myself and our team in is that if we're working with an amicable couple, we can often do a transaction prior to final decree. We can get people into homes. We can get them into their new home so that they don't have to move twice. They don't have to get into a rental and then get into their new home. I think what I see happen more often than not is the perfect home comes on the market. They're in the middle of the divorce. And what I mean by perfect is that's individual, right? For a lot of my clients, it's perfect in proximity to where the kids go to school, where the marital home is. So it makes it easier for, handing off. It's easier for the children. And so if you just are working with a CDLP early on in the process, something like that might come up, and we might be able to help you get into that perfect home so you don't miss that opportunity. So, I mean, there's no harm in getting started early. I think there's only harm in getting started too late.
So in terms of practical steps for our listeners, for someone who's listening and is thinking, I think I might want to get divorced. I don't know where to start. What are the first pieces of information or documents that they should gather before they come and talk to you about their mortgage and divorce?
Yeah. So I can typically run through questions very quickly with them. I'm going to ask certain things like ballpark, what do you think the value is on your home? What is your current mortgage payment? What is your current mortgage balance? If you have a second mortgage or a home equity line of credit as well, I'm going to want to know that. I'm going to want to know a little bit about your employment and your income, just so that I can really do just a quick little assessment of kind of where do you stand today. So, I mean, just those things. Most of the things that I'm asking, most people kind of know off of the top of their head, so they don't have to do a whole lot of gathering. In a consultation, I'm not going to get in too deep. If they hire me, we go really deep.
What are some good questions a divorcing homeowner should ask any lender that they're considering working with to make sure that that lender understands the divorce side of things?
Yeah. For starters, are they a CDLP? I can tell you, I didn't know what I didn't know before I got my certification. I thought I knew everything because I had been through a divorce. I had 15 years under my belt as a lender. Um, but I think that's a good starting point is ask if they are a CDLP. After that, find out if they actually have a CDLP consulting business that they charge for. Because if they are not charging you for that time that they're spending with you, their only goal is to get you to a new loan. And the right thing for you might not be a new loan. The right thing might be for you to do a release of liability or an assumption. So that's kind of the path that I go with that. Um, and there's a lot of lenders out there that have their CDLP that don't actually practice, or do much in this business. So it's great because they have a lot of knowledge, but it might not be the best fit for you. So definitely ask questions, ask what their experience is and how many divorcing clients they've helped.
What is one thing to avoid doing with the house or the mortgage during divorce? If you had to name one thing to avoid doing, what would it be?
Don't pay that mortgage late. Yeah,
Okay.
it will. If
And
you are eligible for a release of liability, right there, you killed it. So they will not do a release of liability if there's a late pay on the mortgage.
what is one myth about divorce and mortgages that you wish everyone could forget?
Um, so I think I I I wish people understood that like the court order, and this kind of goes back to something we already talked about, but I want you to know that just because a judge says that this is what you have to do moving forward, doesn't mean that this is what the lender will do because we can't. And we're not party to your divorce. So I don't, there's a lot of misconception out there, and I see that a lot on social media posts, well, the judge ordered that this happens. Well, the judge cannot order a lender to remove you from a mortgage. The judge cannot order a lender to approve your refinance. So, I wish that people understood that a little bit deeper.
Well, Carla, this has been incredibly helpful. Mortgages and home decisions are such a big part of divorce, and I think you've given our listeners a much clearer picture of what's really involved and where planning makes a huge difference. So thank you for being here with us today. For those of you listening, remember today's conversation is for general education purposes only. It's not legal, tax, or personalized financial advice. Your facts, your state, and your lender's guidelines all matter. So please talk to your own professionals before making decisions about your home, your mortgage, or your settlement. And I hope that you take Carla's advice and you seek out a CDLP if you're thinking about going through a divorce. If you'd like to connect with Carla directly about your situation, you can reach her at her consulting company, which is mydivorcemortgageplanning.com. She works with divorcing homeowners and divorce professionals across the country, and she can help you understand how your settlement and mortgage options fit together. If you're looking for more information about the financial side of divorce, or you want to find a certified divorce financial analyst in your area, please visit our resources at cdfa.com. You'll also find a way to submit questions for future episodes, and you might be one of the next questions that we feature. So, Carla, thank you again for being with us today. We really enjoyed having you. And to our listeners, thank you for joining us wherever you are in the process, considering a divorce in the middle of it or rebuilding afterward. Our goal is to help you feel a little bit more informed and a little bit less alone.
Thank you. Thanks for having me.